Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now let's just look at the markets. We've had the Fed come and go. We've seen, they've cut by 0.5%. Markets have rejigged. There's been a bit of repositioning in the Forex market and also in the bond and equity markets, right? So let's just have a look. Like on the hourlies, right, you can get a little bit confused because after the Fed, looking at the dollar index here, hasn't really gone anywhere. We've seen that big push down, rallied higher, it's retraced back. Like the price action's been a little bit hobbity-gobbity, okay? But you know what? When you look at the hourly charts, it can look a little bit confusing. Always good at the start of the week, right? To come back and have a look at the overall trends on the longer-term charts. It can make sense of what's going on. Dollar index down, dollar Swiss down. You got to say dollar yen still going down, but a nice little sort of false break to the top side. Dollar CAD, it's doing its best to go down, but Oil is sort of creating a little bit of disharmony there for dollar CAD. Euro, well, Euro's going up still, even though it's sort of stalled here at the moment. Sterling, Aussie's doing its best to sort of keep going higher, and probably the only central bank or one of the key central banks that are on hold for an extended period of time. I think that'll change soon, but I mean we'll see how that plays out. And Kiwi, well, it'll do what the Aussie, Euro, and Sterling does, right? Very small economy. It's basically a correlating instrument with those pairs. So that's the daily charts. You come back and have a look at the hourlies. Now that makes a bit more sense, right? Like the dollar index and Euro. Euro is the biggest traded currency pair, right? And we're caught up between what the Fed were cutting and everything else that's going on. Whether there's too much similarity between the Fed and the ECB. I still think the Fed are by far and away definitely on a stronger cutting cycle, so it should go. Whereas you look at Sterling, Aussie, and Kiwi, they've got great shape, right? Really good shape. The Euro needs to fit into that, right? And this sort of price action where Euro is here, it reminds me of where Sterling was at this point, right? But once it gets going, okay, then it really could kick into gear. And just to give you a bit of a heads up on that chart, you know what? There's a bit of a top here at 112, the figure, whether that's a big option barrier or wherever it may be. You can see where it sort of topped out there previously. It got close last week, but no cigar, right? So I'm thinking, you know what? A break above 111.80, 112, the figure, that could be the catalyst to see Euro really have a run to the top side. On the other pairs, I've got to show you this dollar Swiss chart, right? It's really like when you look at these things, and I blow them up just so we can sort of see what the price action is and various bits and pieces at the market. But if I wind this chart back just a touch, this trend line at the top, it has got great shape. All right. And let me just get the data in there. Okay. Now let's just fine tune that top there. Okay, so looking at the dollar Swiss, 1, sort of 2, 3, 4, 5, 6, 7 touches, right? I know we've got a little bit of a squeeze just above that level, but to me, this is like a really good trend line, right? Does it break higher? Well, fundamentally, the dollar says no, right? But we'll see how it plays out. To me, this is like the market, the last part of the stops. I'd like to see a little shoot up, clean out all the old stale short positions and then move down. I'm definitely looking to get into dollar Swiss on the downside. It's just a matter of the timing. And we do have the Swiss National Bank this week. Maybe they give us some clues as to what's going on. And you wouldn't be mistaken for starting to draw in like just like the start of the new support trend line. And I'll leave that orange because it tells me that it's not like really the best trend line, but it gives us a potential target to look into the market. That sort of bull bear line there at 84, sort of 70 coincides with that support trend line, that new support trend line. That could be the level to be getting into. So they're the little bits and pieces that you need to be sort of fishing out, trying to work out where things are, what's going on. All right. So then we come back and have a look at the overall market here. Now, interest rate probabilities. Okay. As I said, we had the Fed come and go. The market is still looking, and rightly so, right? The Fed have come out and said, we are going to cut by another 0.5% before the end of the year, right? And then with the elections coming up, the market is going, you know what, they'll probably go again, right? Because the dynamic nature of the markets and how long it takes for these interest rate cuts to hit the market, they need to get aggressive. And this is something the other central banks should be taking a leaf out of the Fed's book, right? Most probable, it's a line ball decision at the moment. This makes all the US numbers, right? It's a bit of a reset after the Fed meeting last week. This makes all the US numbers active and tradable. They will have an influence over what the Fed does next month, whether it's a quarter or 0.5%. So I'm expecting active markets, especially on the tier 2, tier 1 US numbers. All right. So that's, to me, that's the key to it, right? The Bank of England, okay, cut has moved to 73%. As I was saying, like no change. The Aussie's the odd one out, but I think that'll end up being detrimental to the Aussie. And the rest of them, well, they're all looking to get busy with cuts, right? So, and that's a little bit of a bugger because you'd like to see one, maybe two cutting and then the others no change. But we haven't got that scenario. Everyone's sort of, it's a bit of a race to see who's cutting. And that's what we have to keep an eye on. And that's why we're looking at the economic calendar. This week, we've got it's the 4th week of the month. Understand that. For those new traders, okay, this is the week where we don't have as much, high impacting numbers. Does that mean there's less trading? Sometimes, but sometimes it becomes the week where there's no major distractions, and then you can start to see the markets move. And that's where you'll be keeping an eye on the risk-off sentiment, right? Risk on, risk off. I think this will become a little bit more evident this week. Okay, really focusing on what's happening on the equity markets and definitely on the bonds. Okay, those yields, well, slightly down from last week. At the moment, we aren't seeing too much activity across the currencies. Right, the markets have just opened up for the week, so you're not going to see too much uniformity across equities, bonds, and the dollar. But we will see that play out as we go through the week. And you can keep an eye on those risk on and risk off pairs, safe havens, etc. The oil trade as we go through that week. Now, let's just focus in on where the key action is, right? So there's a whole bunch of Monday flash PMI numbers, right? So manufacturing services out of Germany and the Eurozone, as it is with the UK as well, right? So all we're looking for is numbers as expected, a little bit stronger, supports a stronger euro and a stronger sterling. So a nice start to bit. What happens here? Sorry, I should just reiterate. What happens here with these numbers? These are sort of good second tier numbers to come out because it can actually settle the market and give it a short-term little bit of direction and get things lined up, right? That's what we really want. We want easy trading conditions. So you're really looking to get into the markets. Coming to Tuesday, we got the RBA cash rate. Now, there's a lot of political tension building on the RBA to start cutting. Michelle Bullock, the RBA governess, she is standing pat saying we're not cutting. And she's even come out. This is what the controversial part is, saying, yeah, a lot of people are going to start losing their houses, right? Crazy stuff from the RBA. I wouldn't be surprised to see the media and a big backlash against the RBA, because if everyone's cutting, it's not like we're on a different planet. The Aussie economy will come to a shuddering halt, and they'll be cutting more aggressively than the Fed. All right, but coming into Tuesday, you got the IFO numbers out of Germany, right? These are good historical numbers, respected in the market. So keep an eye on those if you are looking to trade euro. Once again, stronger numbers goes with that weaker dollar sentiment. Then you come into Tuesday, but we've got a pretty good day here for the US numbers. I mean, there's some home price numbers here, but the Case-Shiller, right, house price numbers, they're actually, I think, even a better indication of what's going on. We've got consumer confidence, okay, numbers there as well. So there's a bit to come out, sort of realign the US dollar, right? Don't forget, it's a reset from the Fed. We're now looking at 0.5% or 0.25%. These numbers aren't exactly going to shape that, but they can give the dollar a little bit of direction. You come into Wednesday's trade, we've got the RBA, okay, CPI, the monthly weighted indicator. This is going to be key. It's almost a shame that this number isn't coming out the day before the RBA, because it gives us, would have given us maybe something to really expect from the RBA. But coming out the day after, this has a chance to shape the direction for the Aussie for the coming month, right? And really what we're looking for are weaker numbers there on that weighted CPI. You come into the rest of Wednesday, you've got some, building permits, home numbers out of the US, some mortgage data there as well. That might give us a little bit of a look. But once again, it's the fourth week of the month. We've got these are like tier 3 numbers, right? So they're not, you need massive variance to get these things impacting the market. You come into Thursday, right? And Thursday's become like a bit of a dollar day, right? Because we've got these initial jobless claims, we've got durable goods there as well. Okay, so keep an eye on that. The SNB policy rate, that's something that we want to see what's going on from the Swiss National Bank. And once again, you come back and you think, well, okay, what are the Swiss National Bank up to in regards to, with respect to, I should say, the other central banks? Swiss National Bank, okay, cut is almost 60%, right? But they're talking about a 40% chance of a 0.5% cut, right? So this is going to be very active. And this is one of the key reasons why I think the dollar Swiss, right? And I was highlighting dollar Swiss, why the Swissy hasn't really sort of backed off here. We'll have to wait and see. You got to think a 0.5 percentage point cut really gives dollar Swiss a bang to the downside. But the market's waiting for clarity on the Swiss National Bank. And that's where I think we'll see the dollar Swiss come into play, and the Swiss crosses for that matter. All right, so that's coming into Thursday. And then if I just scroll over to the next page, we've got coming into sort of Friday, right? As I said, this is the last week of the month. Next week, we'll have the non-farm payrolls and a whole bunch of things coming out. But you're coming down here to Friday. Okay, we've got some unemployment data. Where are we? Here we go. Okay, whoops. Let me scroll down just a touch. The German sort of unemployment, worth keeping an eye on there. Bunch of sentiment numbers there out of the Eurozone. You usually don't get much out of that, but you know what? If you don't look, and you're sort of not ready to prepare to trade the opportunity. But what the media have actually done here, they sort of made the last week of the month like trying to build the PCE price index up as a massive number, right? So this PCE price index number, yeah, it is a key number. It is an inflation number, but it's not the be all to end all. This may give us an indication though, whether we are looking at a 0.25 or a 0.5% cut from the Fed at the next meeting. We've got Canadian GDP numbers, and then you've got the University of Michigan final numbers. Okay, not as quite as active as the prelim numbers, but a sort of well-respected number. But the PCE price index is going to be the key for Friday, and that's what the media will be focusing on. You know what? I think it's like a second tier inflation number, but you know what? It is a building block towards what the Fed are looking at. And that's pretty much it, guys. It's, as I said, it's the fourth week of the month. There's bits and pieces coming on. By Wednesday, we should have a good idea what's going through the market, piece it together, have a look at your charts, see where their sentiment opportunities are, if there's any sort of significance. I think the Swiss National Bank will be one of those key events that we've got to sort of focus on. And it's like the RBNZ and the Swiss National Bank, two of the smaller central banks, but they can have some punch when they get going, right? So that's something that I'll be watching very closely as we go through the week. There's some final numbers there out, just sort of scrolling through the calendar here. But you know what? It's going to be sort of a pretty active week with regards, seeing what the dollar does, especially after the Fed last week. That's going to be the major attention. And I should highlight for those traders or members who do have access, we have a couple of key webinars. One that I've been getting asked a lot about is understanding what has been factored into the market. That's a key part to understanding what the reactions are on the economic numbers in particular, right? And how the market is positioned, because then if something does come out, if you know how the market's positioned, then you're going to know the reaction, and you don't have to wait for the market to move. You can hit it straight away. So that's a key one for this week. And I'll be highlighting the Aussie inflation rate numbers there on that Wednesday as well. All right. So some things to keep an eye on. All right, guys, that's it for me. It's there's plenty to play for. I'd say, if anything, if you've got a busy, active lifestyle this week, don't get too worried about missing too much. The key numbers are next week, but we could still see some action here, right? Especially around that Swiss National Bank. And if you're looking at like what's happening here with a lot of these central banks, everyone's starting to look at 0.5%, right? That's what it's like becoming the new thing. You get back into the late 80s, early 90s, more late 80s, central banks were cutting or raising rates by or changing rates by 2.5%, 5% at a time, right? Alan Greenspan changed the structure to more like a 0.25 through the early 90s. Now we're back to 0.5% because you know what? These central banks have waited, and now the economies are coming to a halt. It's going to get active. There's going to be lots of opportunities, but you've got to be very selective with which ones you hit and when you hit them. The timing is crucial. All right, guys, and hopefully we can help you guide you through that with the daily market updates. All right, guys, well, that's pretty much a wrap from me. Just taking one last look at the global markets. You know what? US equity futures down. Okay. As I said, from last week, the US Treasury yields are down, but they've sort of stabilized and no sort of clear direction here on the currencies, as you'd expect, just at the start of the Asian session. So the risk on, risk off pairs, not exactly clear. Safe havens, well, they're not really getting into the yen and the Swiss at the moment, right? So everyone's on the sideline. Let's wait for the markets to reconnect, and then we can sort of attack the markets once we know exactly what's going on. All right, guys, good luck this week. All the best. Cheerio.